Hey everybody! So in the last couple of weeks, profits from the largest cap cryptocurrencies, we're looking at Bitcoin and Ethereum, they've been rotating into the most promising up-and-coming Layer 1 solutions like Cardano, Solana, Avalanche, which have just been killing it lately. Now, this has largely been due to a disparate set of bullish news, which all happen to coincide at around the same time. We've got Cardano, up 100% to almost $3 after founder Charles Hoskinson announced a firm date for the launch of smart contracts. Historic update, almost 6 years in the making. We've got Solana, up 90% to over $80 due to an NFT launch that went impeccably well. We'll be talking about that one. And we've got Avalanche, up almost 200% to $50 after announcing a $180 million DeFi initiative involving partnerships with Aave and Curve, two of the top 3 DeFi protocols out there. Now, what's particularly amazing are the gains that all 3 have made against Ethereum, which serves as kind of like an index for the altcoin space. Now, in 2 weeks, the combined market cap of all 3 cryptocurrencies have pretty much doubled and is now 30% of Ethereum's market cap, and that's roughly $120 billion. In fact, these 3 Layer 1 solutions combined is now worth more than 5% of the entire cryptocurrency market. And what's amazing is that we haven't even begun to scratch the surface of what's possible with these 3 blockchains yet. Cardano still doesn't have smart contracts, but it's coming. It's a good time to be a spectator or an investor as the battle of the blockchains heat up. So in this video, we're going to dive into why ADA, Solana, Avalanche have pumped so hard. We'll look at price action, what's ahead, and what may just be the next cryptocurrencies to pump after these 3. Hint, hint, nudge, nudge. Alright, let's dig in, shall we? Now, as I've discussed in another video, capital in the crypto space flows in a somewhat predictable way known as the crypto money cycle. Now, after a large correction, the first crypto to pump is Bitcoin, the cryptocurrency reserve asset. It has the largest market cap, least volatility, and attracts the most amount of institutional interest. Now, after a nice Bitcoin recovery, profits begin to rotate into the large cap altcoins like Ethereum, Cardano, Binance Coin, XRP, and so forth, as investors raise their risk profile to chase continued profits. Now then, profits from these rotate into the mid and small caps before it goes all the way back around to Bitcoin again. Now, as traders, the general goal is to rotate your capital at the right times to the next part of the crypto market that is just about to pump, so that you can continue to ride that wave of profitability. So, Ethereum and Bitcoin have both had a nice pump. Where are the profits being rotated to right now? Well, coming of age Layer 1 solutions, otherwise known as the Ethereum killer blockchains. You've got Cardano, Polkadot, Solana, Avalanche, Algorand, to name some. Now, these blockchains have the real potential to steal some of Ethereum's lunch because they strike a fairly optimum balance between decentralization, security, and scalability. Now, Ethereum's break it and fix it kind of development over the years have introduced a lot of technical debt. Right now, its biggest problem is scalability. The gas fees are just too damn expensive. No one wants to pay $10 to $50 just to put a transaction through. It's 2021. We can do better. And that's where Cardano, Solana, Avalanche, the Binance Smart Chain are coming in. Alright, so let's look at these 3 Layer 1s that have been pumping really hard and dig into why they've been pumping so hard and what's ahead, starting with Cardano. Alright, so last week I discussed what's going on with Cardano, and I'd urge you to check out that video. I'll link it above and below. The Alonso hard fork, which is going to introduce smart contracts finally to Cardano, 6 years in the making. It's going live on September the 12th. Now, it's currently undergoing final feature and stress testing on the testnet. And I'll give you a bit of a history of the price action since the announcement by Charles Hoskinson's team. Now, August the 10th, Charles Hoskinson hints that he's almost ready to announce the mainnet launch date. Prices immediately spike. And if you look at the ADA valuation versus Ethereum, which had bottomed, which by the way tells you that it was a good time to pick up some ADA, immediately spiked upon the news. Now on August the 14th, Hoskinson's team announces the launch date. It's going to be September the 12th. in a month's time. And the prices actually correct a bit as the date was a little bit further out than some had expected. August the 19th, Hoskinson's team announces that beta testers on the testnet were successfully using SundaeSwap, Cardano's main decentralized exchange. Now this meant that smart contracts was working on one of the most important places it needed to work, which was very bullish, and so prices began pumping again. And so since August the 10th, ADA has pumped from $1.45 all the way up to $2.80, almost doubling. And looking at the ADA ETH valuations, ADA has appreciated almost 100% versus Ethereum. And now the question is it too late to jump in? Well, as I discussed in the Cardano video, which I urge you to check out if you haven't yet, Cardano tends to pump hard and reliably before important hard forks. Now for the Merry hard fork in March, ADA pumped 70% in the 2 weeks between the announcement and the mainnet launch. And interestingly, it was able to do this while Bitcoin was correcting, well, it's more like dumping, from $56,000 all the way down to $43,000. That's how strong the bullish momentum was for ADA. Now, in the Cardano video, I explained that if ADA pumps against Ethereum for the Alonzo hard fork, as hard as it did for the Merry hard fork, we could see up to a $7 ADA. Right. Now, I don't really know how likely that is. We're going to keep in mind that to reach a $7 ADA, it's going to require a much higher market cap than it did during the Merry hard fork phase. But at the same time, the Alonzo hard fork, the introduction of smart contracts, is by far the most important Cardano update ever. So we'll have to see. All right, moving on to the next layer 1 solution that's been gobbling up investor money, including institutional money, and that's Solana. Now, why has Solana been pumping so hard? Well, 3 reasons: wormhole, institutions, and NFTs. Now, Solana recently launched a new bridge called Wormhole. Now, bridges allow you to move assets between blockchains. For example, to move your cryptocurrency to Polygon, you can use an Ethereum to Polygon bridge if you're moving ERC20 tokens, like this, or you can use a Binance Smart Chain to Polygon bridge if you're moving BEP20 tokens. Well, Wormhole allows you to move assets from Terra, Ethereum, and the Binance Smart Chain to Solana. And this is going to help drive mass adoption of DeFi on Solana, which means real value being created on the blockchain, which is quite bullish. Now, another reason Solana has been looking bullish is because it recently raised over $300 million by crypto hedge funds and well-known Silicon Valley venture capitalists. Now, what's funny is that the funds were raised to invest in making Solana a faster blockchain. Now, this is actually kind of comical, because Solana is already incredibly fast. That's one of the main selling points of Solana. You're looking at, actually these days, 65,000 transactions per second. Now that's 2,000 times faster than Ethereum, 2,000 times. It's 40 times faster than Visa. It's crazy. Now, Solana was essentially created by engineers who were keen to solve the issue of transactions being front-run, which Ethereum was notorious for. Now, Solana's innovation in having execution orders that can't be front-run, and then you have the very fast transactions, the very cheap transactions. It's going to be great not just for DeFi, but Wall Street and the stock market, which really is where Solana is looking to disrupt. So, Solana, it's decentralized, it's secure, it's scalable. It really is one of these crazy good layer 1s that deliver on all 3 fronts. Not many compromises. Alright, now the biggest reason by far that started the huge rally that we've been seeing is actually NFTs. On August the 15th, an NFT project called the Degenerate Ape Academy, comprising 10,000 unique pictures of cartoon apes, it launched on Solana, which is Solana's first NFT platform. Now, no matter what your opinion is of NFTs, there is a big and growing market out there for quality NFTs. In fact, it can be very hard to get newly minted NFTs. It's kind of like fighting for the best tickets for the top concerts. Anyway, the Ape NFT set sold out in just 8 minutes. Now, when you buy the NFT, you have to pay the gas fees in Solana, which is thankfully quite cheap, about 1 cent. But you also needed Solana, namely at least 6 of them, to mint the NFT if you were lucky enough to get your hands on one during the sale. Now, that minting fee has now gone up to about 14 Solana. And then on top of that, you have all the subsequent trading that happens between NFT fans, and they're going to be buying up a lot of Solana to be able to trade these NFTs in the marketplace. Alright, so since this bullish NFT launch, Solana prices have been up essentially 90% in 1 week. And looking at the value of Solana against Ethereum, we can see how Solana prices have been stabilizing towards the 0.013 range in a wedge. In other words, the price of one Solana token was approximately stabilizing at around 1.3% the price of an Ether. Not a bad time to buy, because when prices stabilize and hold like this, well, it's kind of like a decent time to accumulate. And then after the NFT launch, Solana appreciated 100% against ETH, right? And with more and more bullish news and adoption coming for Solana, I expect Solana to stabilize at a higher and higher price versus Ethereum. And the only way this will really change is if bad news comes to Solana, or very bullish news comes to Ethereum, such as news related to the Ethereum 2.0 upgrades, or perhaps new institutional adoption. Alright, now looking into the future, how far higher can Solana go in this current pump? Well, it is kind of hard to predict because Solana right now is at all-time highs, so Solana is essentially in price discovery mode. Now, is there a chance that we're going to see a decent short-term correction? Yeah. Is there a chance that Solana will keep pumping above $100? Yeah. You're looking at a market cap that's still less than $30 billion, which I think is completely reasonable. Alright, moving on. Now, after Cardano and Solana, Avalanche began pumping on August the 17th after the Avalanche Foundation announced a $180 million initiative to bring some very large DeFi players to the Avalanche blockchain. Now, similar to Solana, Avalanche has had other bullish news lately, including the announcement of its own bridge that has so far helped migrate over $100 million of investor money from the Ethereum blockchain to Avalanche. But what really kicked off Avalanche's huge pump was this $180 million DeFi news. Now, let's take a quick look at prices, and then I'll discuss why this news is so bullish, and then I'll talk about some price predictions. Now, looking at the value of Avalanche against Ethereum, we can see how the AVAX prices were bottoming out for a bit, which is a sign that it's a good time to buy in. Now, after the partnership news, AVAX absolutely skyrocketed, appreciating 200% against Ethereum. So one AVAX is about 1.5% of an Ether now. Right. And because AVAX is now inherently a more valuable blockchain compared to before the news announcement, we should expect the AVAX ETH valuation to stabilize at newer highs. Right. Now, how much higher can we go? Well, we're actually still around 15% away from the all-time highs, and I actually think we've got the potential to fly a lot higher. And to explain why, I need to talk a bit about this major initiative in a bit more detail. So what exactly is this $180 million so-called Avalanche Rush initiative? Well, part of this is Avalanche is going to partner with Aave and Curve, both of which are in the top 3 DeFi protocols by total lock value. Now, this is exactly what Polygon Matic did in March. They partnered up with Aave and Curve. For Avalanche, there are going to be liquidity mining incentives for holding AVAX, just like there was for Matic. And it's going to mean 2 things. Number 1, people are going to want to buy AVAX tokens to pay for gas fees on the Avalanche blockchain and participate in the liquidity pools on Aave and Curve. Right, it's very similar to how people have to buy up Ethereum in order to participate in DeFi on the Ethereum blockchain. Or another example, just like how you have to buy Binance Coin to participate in some of the DeFi activities on the Binance Smart Chain. All of this DeFi activity on the Avalanche blockchain, it's going to be putting upward pressure on AVAX prices. Now, number 2 is that Aave and Curve are very big DeFi protocols, right, with a total of 25 billion of crypto investor money locked between them. So making them available on Avalanche is going to help drive mass adoption of Avalanche as an alternative to the high gas fee Ethereum blockchain. The gas fees on Avalanche are very cheap. Now, again, what Avalanche is doing is straight out of the playbook of Polygon Matic. It makes a lot of business sense. In fact, before Polygon's own version of this initiative in March this year, where they partnered up with Aave and Curve, there was little on the Polygon network that caught the eye of DeFi fans. But after Polygon's partnership, many investors moved their money on Aave and Curve from the Ethereum blockchain to Polygon to do their staking farming and liquidity mining for far cheaper gas fees. And so it's by looking at how Polygon Matic performed after their partnership that gives us hints as to what might happen with the Avalanche prices. Now, after Polygon partnered with Aave and Curve around March and April, its prices launched into orbit, going up 700% in a fairly short amount of time. Now, Matic's price only crashed because of the May 19th crypto market crash, which pretty much also killed the altcoin season that had been blossoming. Now, if the AVAX price also did a 700% pump since the announcement of the partnership, which was when AVAX was at around $20, we're looking at a 7 times $20 equals $140 Avalanche, all the way up around here. Now, with that said, the market cap of Avalanche was a little bit higher starting out compared to Polygon Matic before they launched their own partnership. So I'm thinking a more reasonable price prediction could be, say, $100 soon, or at least another doubling of the current prices. Now, another nice thing about Avalanche is, just like with the Binance Smart Chain in Polygon, you can use your MetaMask wallet. Now, this is very important because the majority of DeFi users typically start with MetaMask and Uniswap on Ethereum or PancakeSwap on the Binance Smart Chain. So compatibility with well-known Web 3.0 wallets like MetaMask is going to help drive adoption. Alright, to finish off, what other top altcoins will be pumping next? Well, I might do another video on this in the near future, but a good idea is to keep out for good bargains in the form of low stabilizing valuations versus Ethereum. ADA, Solana, AVAX, they were all bottoming out against Ethereum before they pumped on big news. Right now, what I'm looking at are the following coins. For example, look at how Avalanche bottomed out against Ethereum for quite a while, right before it did its massive pump. This is an ideal time to buy in. So on that criteria, well, I think Polkadot looks pretty good. And I think Chainlink looks pretty good as well. I think there's a good chance that both of these cryptocurrencies, which are both very important projects within the cryptocurrency space, are going to see some pretty good times at some point. Alright guys, I hope you enjoyed this video. If you found it helpful, please feel free to give me a like and a subscribe. Alright, have a good day, evening, wherever you are, and I'll see you guys in the next one.